Hello everyone, my name is Maurice here. Welcome to Things Invest, where we're going to be talking about finance, investing, and personal developments. For today's video is for entertainment purposes only. What I'm going to be talking about with you guys is going to be my top EV stocks to invest for the month of April 2021, my target entry price point for these respective stocks, and as a side bonus, my price target for the end of 2021 as well. So stay tuned, stick around, and let's make some money. So as an introduction, my name is Maurice Ain. I am a former Wall Street investment banker at JP Morgan, and subsequently I worked as a private equity investor for close to half a decade of my life, and most recently as a tech executive in Silicon Valley as an operator. So basically spent about close to a decade of my life on both Wall Street on the finance side and subsequently in Silicon Valley on the technology operational side. So now I come here on YouTube, try to utilize the knowledge and the experience that I've acquired in the last 1 decade of my life to try to help people around the world, to teach them and also provide my wisdom on financial freedom that we're all striving for. All I'm really asking for you guys to do is to hit that like button below, that subscribe button below, and that little bell notification below to get notified when I post videos, which I plan on posting about 2 to 4 times a week. It helps me, it helps with my family as well, and it most importantly helps with the YouTube algorithm to hopefully spread the good work that I'm trying to do to, subsequently we can all rise together financially and successfully. All right, so here's the 7 stocks in the EV sector that I've identified for you guys that I believe are currently at very, very attractive price for us to get into. So you can see that the list of stocks are right here on the left side, starting with Tesla, which is basically the big dog, the motherlord of all EV stocks right now. And as you can see, just look at the historical pattern. Ever since the stock split back in Q3, Q4, we've been basically pushing up with all the crazy momentum all the way from basically around like the 400s levels all the way to $900, 940 to be more specifically in this chart. And you can see that ever since then, starting in Q1 and slowly now shifting in Q2, we've been having that that massive sell-off, that whole EV crash, if you may. And the crashes really stem from a couple of catalysts, right? One is the sector rotation. Two is because of, Q1 is typically a down quarter for a lot of the automakers in the industry. Three is because of the inflation scares that Jerome Powell's. Four is because of the 10-year Treasury yield that's been spiking upward. And fifth, and this is more of a psychological thing because we have already gone up so much in the last, during the last year in Q3, Q4. The market was just basically looking for a reason to correct, right? And on top of that, Q1 is a tax season for most people, right? I know that we pushed the tax date to May 17th this year because of the whole COVID situation, but the market was basically just looking for a reason to correct. And on top of that, this eighth reason, I think I've just named like over like close to 10 reasons so far, is the EV chip shortage that we're experiencing right now globally, which is demanding this massive sell-off in this industry, in the EV sector. Right, and ever since we did that, we hit that bottom of 539.49 right here, and then we kind of bounce back up, and then we bounce back down. So we're creating some sort of like a higher low, and I think the 539 was the bottom of the crash, and then we are currently trading on this sideways consolidating movement. And right now you can see that I drew this like wedge right here. This is a bullish pattern that we're forming right now as a wedge, and you can see that the wedge is crazy massive, right? If you take a look at it right now, look at how big is the wedge, right? And then what I foresee as a near term, in the near future, before we hit the earnings or sometimes around the earnings, is that we're gonna consider trade sideways, and then we will have some sort of a massive push, sometimes by May, or sometimes around the earnings, which I believe the earnings around like 427 or like somewhere at the last week of April. And I think this is very plausible that we will be pushing upward. And I think the next resistance level that we will be pushing up is going to be somewhere around like the 780 right here, 780 around that level. And for Tesla right here, I am extremely bullish in this stock right now. I would personally buy a ton of stocks into Tesla right now. I personally have a huge position in Tesla. It's my largest holding right now. I have like I think 40% of my equity holding is comprised of Tesla. I have currently around like 1,200 shares of Tesla stocks right now, and I continue to build on it with every paycheck that I get or every equity capital gains that I get, I always like put that into Tesla stock. So Tesla is something that is extremely attractive price point right now. I foresee that this is a definitely a strong buy for me. And by the end of the year, I believe this could very easily hit 950, or at least or at least going hitting back to the all times high at the 900, which I see that extremely possible. Or even push further to 1,000 level, hitting $1 trillion market cap for Tesla, which I believe that is a highly possible thing to do. Um, Maybe not in 2021, but sometimes maybe in 2022. That's totally possible as well. Moving on to NEO, which is my second biggest holding that I have in my portfolio for my EV portfolio. Just taking a look at it right now, as you can see, ever since last year in Q3, Q4, we've been having that massive push all the way from like the $14, which is, luckily the price point that I got in actually, to all the way to $56. And then we have like more of a slight correction and then push up again to the $67. And ever since then, starting Q1, because of the whole sector rotation for tech and growth stocks, and also because of the like some of the catalysts that I just mentioned to you earlier with the EV chip shortage, the 10 years yield treasury yield increase, and also because of the fact that we have already experienced such a huge, massive momentum push, that euphoric push, if you may, that people are realizing that, hey, we might be pushing too further ahead, right? So the market was basically just looking for a reason to correct, and ever since then we have been correcting, and it corrected, and it hit that from $63 all the way down to the $31, $30 level, and right now we just basically trading on a consolidating sideways movement. And you can see that right now we are hitting a bottom, and I think this is a strong resistance level is at the $30, $32 level. And the next resistance level, if we breach that, would be all the way back down to the $26 level, which I foresee that not to be happening actually. That's the likelihood of that happening to be very unlikely unless it's going to be some black swan event, or unless like the business model has fundamentally completely shifted, or something that has to do with the political black swan events that happens that that's out of control. But I don't really foresee that to be happening, right? I think China, I think it promises that by 2030, all the vehicles will be transformed or converted into electric vehicles going forward. So that's a major macroeconomical trend that's providing this company with a great tailwind for its growth going forward. On top of that, like NEO, based on the recent tweet that I think William Lee or NEO, the company, has tweeted that it has hit the great milestone that Elon Musk has actually validated and praised them for. So that's another like just industry validations, a sign of approval that NEO is here to stay. It is a company that is poised for growth and success going forward. And right now, because of the fact that we have already had such like a massive correction already, we have been hitting the bottom and we are consolidating. I think right now is the perfect time to buy at this price point right now. I was actually very surprised that we actually breached that $40 resistance level, which you can see that the $40 resistance is very, very strong. And I foresee that, and even though we did go below 40, we right now we're forming that secondary resistance level, and I think as we consolidate more, we will be And with the earnings coming out, which we all know that the Q1 earnings and the delivery is gonna knock it out of the park, like what Neo's on their Twitter has already mentioned, that the next push up is gonna be around like the $41, $42 level. That's a next resistance level, and then if we breach that, we will go skyrocket all the way up to back to the normal range level at about like $50. So I foresee this by mid year, by summertime, we're gonna be hitting around like $50 in sometimes in Q3. And then by end of this year, I foresee this to continue to push up all the way to an all-time high, which I believe about like 75 to, and I think my optimistic case is going to be somewhere around like $85 per share by Q4 with the Santa Claus rally going forward. So this stock is definitely a good price point to buy right now in a dollar cost average perspective. And then Lee right here, similar to Neo, you can see that historically has that push up again, and then with the all the macroeconomical catalysts that I mentioned earlier, it's been selling off ever since then, and right now it's forming like these three bottoms right here, as you can see, and this is forming a very strong resistance level at about like the $20 price line level. And I think right now, similar to like Neo and Tesla, Lee is another Chinese player that's poised for success going forward. It's probably not as obviously not as big as Neo and Tesla, but the market shares for EV industry is still up for grab, right? And I think there's still a lot of white space, a lot of green space for these companies to up for grab. And with respect to China itself, and just China speaking itself, there's still a lot of adoptions going forward, which gives a lot of room for Lee to capture going forward. So right now, I think with this level right here at the $20 level, we are still consolidating. I don't foresee us to be going further down to like the $18 level. I think that's highly unlikely. I think right now the $20 level is going to be a perfect buy zone for you to a dollar cost average. And as you can further consolidate, it is eventually going to slowly push up. Being driven by like Neo and Tesla, which they all have strong correlations all together. And Xpeng as well, as you can see, very similar to, in terms of like the pattern, right? So these all kind of like trade on a similar fashion, similar to Lee and Neo and Tesla, all that with that strong push up all the way to $75 from the bottom of $18. That's a crazy massive gain. That's like what 300% gains, crazy. And then ever since then, by Q1 we have that massive correction, that EV crash, if you may, down back to the $30 level. So it hit that bottom of 26 and then consolidating at the $30 level right now. And right now you can see that it's forming some sort of like a higher low, which is a great bullish pattern that is forming. Similar to Lee and Neo and all the other EV stocks, Chinese EV market is definitely poised for another growth going forward. And it's just China. Xpeng and Neo and Lee and Tesla is going to expand globally going forward. So with respect to its market cap right now, it's still very small in comparisons to other players that are in the EV industry. So I foresee this company to continue to push up going forward. And by midsummer, it's going to reach somewhere around like the $48 level, and then by the end of this year, I foresee this to reach all-time high, even or at least close to all-time high at around like $60, or if even more optimistic, if we have like a massive, crazy bullish catalyst, we might push even further than this $79 price point. And next one is Fisker. Fisker is definitely a stock that I've been eyeing for a while, and this is the just look at the technical charts right here. It's a very attractive pattern that I'm seeing right now. As you can see, ever since last year in October, we have that push up, so that euphoric moment, and then slowly correct it. And then ever since that, is on the consolidating on a sideways movement, and similar to like all the other EV stocks, somewhere around like March, somewhere around like Q1, we had that March that push up in early of Q1, and then ever since then, all the EV stocks has been corrected because of the all the catalysts that I just mentioned to you guys earlier. And right now we are hitting this major resistance level of $14, which is we're currently forming right now. So right now we are forming this on a sideways movement. So this is definitely a stock that we need to watch right now because there's a likelihood that if we break this resistance level, which you can see is a very strong resistance level that we've been trading for, December all the way to, so for like 2 months straight, we've been trading sideways like that. That if we break that, the next level will be going down to somewhere around like $10 to yeah, I think around like $10 or $11 per share going forward. I don't foresee that to be happening. I think that the correction has already corrected itself. It's already priced in pretty much all of it. I think more correction will be very very unlikely, and I think it will be unreasonable unless there is some sort of like really negative catalyst that the company is doing that is shifting its business fundamentals, or that's some sort of like black swan event that happens with the company, like I don't know, the CEO got hit by a bus or something like that. But I really don't foresee that to be happening. That's very unlikely, and touch wood, I foresee that to be happening as well. I think right now it is going to be staying around this level, and going forward as we learn more about the EV chip shortage, to be reviving more, coming back, and as we further adapt more, EV conversions into our market, I foresee this company to be going back to where it came from, to the all-time high sometime soon. I think probably by end of 2021 or sometimes in 2022, and that's basically like a more than a 2x your money, right, from there. So that's a pretty attractive one for me. I think based on historical trends, the likelihood of you breaching that resistance level is highly unlikely. So I think this is a perfect time to buy right now. CCIV, so this is definitely more of a spec play. Currently, the company doesn't really sell any cars yet. They are pre-selling, so they have a lot of pre-revenues right now. So, but the company still has a lot to be proving itself. It is more of a unique one compared to the other companies that have already been producing cars and stuff like that. As you can see that the stocks has been ever since start trading at $10 when it first started as a spec, or it traded all the way up to $64 per shares at one point, with this huge momentum shift. And whatever goes up really fast comes down really fast as well, and that's exactly what happened in Q1 with respect to like all the sector rotations and all the negative catalysts I just told you guys earlier. And right now, I think it's trading on a sideways movement right now. I think with respect to the market cap right now, I think this $5.8 billion market cap. I don't think that's a correct representation of the business. I think it's a little bit higher than that. It's a lot higher than that. But right now, just look at the technical charts. I think it's trading on a sideways movement right now. I don't foresee this to be going down even further. I don't foresee this stock to go below $20 anytime soon. I think that's highly unlikely. Most of the I foresee, and you see that there's a huge gap here that needs to be filled. So I foresee this going to be going up sometime soon. I think by summertime we're going to be hitting about like $42, $45, and eventually completely breach that gap of hitting like $64 by end of this year, or even higher, all times high. The contingent on how the overall EV sector is trending, and contingent on how the chip shortage is trending, and if the economy is coming back up, with the whole COVID situation, and also with the macroeconomical inflations, and also with the yield rates, are we gonna be doing okay by then? So that's all to look out for. But right now, I would say this is a pretty attractive price point for us to get into because of the whole resistance level that we've been forming. Lastly, the charge point station, the charge point holding. So this stocks I have been buying ever since it was at the $14 level. I think my price average right now is at 14.17, and I've been holding it ever since. I saw that whole ride to 49.48, and I actually sold some when it hit like about like $1 level, which gave me a crazy gain. So I just had to take some profit. And ever since then, it's been kind of selling off. But the sell off is not as significant as like the EV vehicles stocks, but it's been selling off because like the reasons that I just mentioned to you guys earlier. Um, and I think right now it's trading on a sideways movement right now. So ChargePoint, if you guys don't know about this company, it is one of the largest charge EV charging station companies in the world by market shares. They have over like 70% of global market shares for charging stations, in comparisons to like Blink, Spark, compared to like Tesla charging stations. ChargePoint is the biggest player right now, and that's the reason why I've invested it, because they have already adopted such great market shares in comparisons by miles. So I've invested like very early on, and I'm very happy that I, been holding ever since. I think right now, the market has been overcorrected so far. EV charging stations is here to stay. I know you could say that there might be other alternatives like battery swapping technology or like solar roof system and stuff like that, but charging station is gonna be like gas stations going forward. And if you were to be invest in gas stations or charging stations going forward, investing into the ones with the largest market shares right now, which you know it's able to be in a dominant position right now, there's a lot of area for other players to catch up, right? And they already have that already. They've already established that footing, and they have that first man power in the industry already. So with respect to the chart right now, I think we have already hit that bottom of like $19 per share. Right now, we kind of trading on this consolidating sideways level, and right now, it will be great if you got in around like the $20 level. I see that right now we're going to be continuing to consolidate on a sideways movement similar to the other EV stocks that you see here, and eventually it's going to push up. But the growth is not going to be as like prominent as like we saw from Q3, Q4. That was really driven by a lot of the euphoric movements. And on top of that, the momentums from all the EV stocks pushing this up. Right now, it's gonna be trading on a sideways movement. On top of that, ChargePoint used to be Switchback Energy, right? I forgot to mention that this used to be a spec. So most specs typically sell off afterwards, right? And I think the sell-off has already been priced in. The whole corrections for the EV rotation has been priced in right now, and I think the market's overreacted. So right now, I think it's a perfect time for us to buy right now. But this is definitely not a quick turn of your buck you know, by like the next 6 months. I don't think you can like triple your money in the next 6 months, but I think in the long term wise, in the next 5 to 10 years, you could definitely, I foresee you be able to 5 times your money or even potentially 10 times your money as this like further grow going forward, as this is going to be a necessity for a lot of the EV vehicles going forward. Looking at tip ranks, starting with the first one at Tesla, currently trading at $695 per share at the time of recording. You can see that currently the average is a little bit slightly lower than the average price target, but I think this price target needs to be updated because there has been some new iteration from a lot of the analysts recently. And I think by earnings season, I think upcoming in a couple of weeks, we are going to have this revised price target on average. And I think this $1,200 high in the next 12 months target is going to be adjusted as well to a northward higher number. So right now, this is, I foresee this going to be, I think $1,200 in the next 12 months or by the end of this year, it's gonna be fair, but I am a little bit more conservative, so I foresee this can be in about like 950 per shares. For Neo, same thing. You can see that Wall Street definitely is a very optimistic on this one. I think a lot of major investment banks have upped the price target for this for Neo. With respect to the 9 equity research analyst ratings, all of them says buy. 6 of them says buy. 3 of them says hold. With a 68.2% upside of $62.04. And I think by earnings is going to be revised again to an upward level. at a price point of $81 at price point by 12 months target. I think my assumption is going to be about like $85 to $90 per share, or even $100 per share, contingent on how we're going to play out on the macroeconomical trends. But I think $81 definitely fair. And as I said earlier, it's definitely we are definitely um, extremely undervalued at the moment with this like growth potential going forward. For Lee, taking a look at Lee right here, $38.58 on an average price point, 76% upside, insane, and with a 44.50 price point, price target in the next 12 months, 6 buy 1 hold, and this is definitely like I said again, right, a very strong buy in my opinion right now. Xpeng, same thing, 42.61% upside, 49.50 in comparisons to our current trading price point of 34.71 right now, with the price tag of $57 of 6 buy 1 hold at the moment. And then for Fisker, you can see that 26.57 for average, 77.49 upside, and 4 buy 4 hold right now with enormous upside. I think Fisker right now is trading at 14.95 in comparisons to this average price point, which is extremely undervalued right now. On the low side, we're actually trading below the low assumptions at 14.97 right now, and the Wall Street analyst assumption is low would be on the $15 price range. So I would say Fisker is a steal right now. I would load up at this moment. I think for CCIV, so this is more of a spec, so I don't think there is any specific price target at the moment. And for ChargePoint, $39 would be the average price point at 53.6% upside, $46 high in the next 12 months, 3 buy 1 hold right now, and ChargePoint is currently trading at 25.41, which is again below the Wall Street analyst low target assumptions in comparison. So definitely another steal for us to get into right now. Lastly, I just want to give you guys a summary of all of the numbers that I've just talked about today. Just to give you a heads up, these are these, as you know, I'm currently filming this or recording this video during market hours, so the numbers are definitely fluctuating. But I've updated in the most recent numbers, and I kind of rounded up to the 10th digit just for illustrative purposes. And the way that I have to position it here would be looking at each of the stocks that I've just defined. What is the current value, which I believe is fair? What would be an attractive price point? And what would be like a steal price point for you to get into? As you can see, Tesla 697 would be a fair price point that's currently trading right now. If we ever hit to 620, if we ever hit 595, I would double up on these price point. And my end of year price target would be 950, which is a 36.3% upside or 1.4 times your money. NEO 37, that's a fair price point right now. $35 is attractive, and then if it ever hits around like $30 or $32 level, that's a huge steal for me, in my opinion, that I would load the hell up into the stocks. And my price target for this would be $85 by the end of this year, which is 130% upside, or like 2.5 times or 2.3 times your money, which is an enormous gains from there for just 1 year. Right now, looking at Lee, Lee 22.5 would be the current price point right now. I find this to be, I don't foresee this to be a lot of movements going forward. So I think 21 would be attractive. If it ever hits 20, or if it goes below 20, I think that's a huge steal. I think Lee is definitely a steal right now with a 70% upside going forward for the price target of 2021 of $38 that I've defined here. Xpeng fair price right now, $35, which is what's currently trading right now. I would buy in right now. I think Xpeng is definitely a crazy steal right now. I think an attractive price point, if we ever hit to the $30 resistance level, I think that's a definitely attractive price point. At the steal level of $30 per share, I don't foresee us to be getting there, because as we saw, Xpeng is pretty much just trading on a sideways level. I think is for us to get the $30 level is highly unlikely. But if we do, definitely grab up a couple of shares for you, as that's a pretty good attractive discount level. with a 65.2%, 1.7 times, so close to 2 times your upside for my price tag of 57 by end of this year. Fisker, $15 currently trading right now. I think currently $15 is already a steal. But if we ever go down, I think 13.5 is definitely even more attractive. I think $12 per share, that's like basically robbing a bank, in my opinion. So that's a huge upside from here. I think Fisker is definitely the one to look out for, but knowing the fact that based on my technical analysis that I just showed you guys earlier, there is a strong resistance level that we need to watch out for. That if we breach that gap, not breach that gap, if we breach that resistance level, the next one would be going down to around the $12 level. So that's definitely something to look out for, with 153% upside, 2.5 times your money potentially by end of this year. Churchill Capital, I think 22.5 is definitely a fair valuation right now. I think it's likely that we might go down back to $21. It's highly unlikely that we go down to 1950, but if we go down below 20 or 1950 based on the technical analysis that I've done, that's a possibility that you might want to grab a couple of shares for those CCIV, because long term wise, I do foresee this company is going to be one of the players in the EV industry, just with the good reputation and the good word of mouth that's already experiencing, and a lot of good pre-revenue orders that's already been experiencing as well. So I definitely foresee this to be going, but definitely this is a company that needs to be proven over time. This is definitely a different animal compared to all the other already have been established EV companies, but this is definitely to look out for. And I think out of all of the ones that you see here, this is the most volatile one, but this can potentially gain you the most gains as well. So this my price target for this end of this year will be like $55, 144% upside, or 2.4 times your money. Lastly, ChargePoint, my favorite, one of my favorite. I think the fair valuation is $25.50 right now. Oh, I need to revise this. I think attractive price point it is $24.50, but I need to change this based on my technical chart. So if we ever get down to 2350, I think that's another fair valuation for us to get into. And then if we ever hit 2050, which I really don't foresee that to be happening, that would require some major black swan events for us to get there. That's an absolute steal for me. And I think by the end of this year, like I mentioned to you, I think the growth is definitely not going to be as impressive as the other major players, because is the charging station is not as like innovative, and in terms of like the adoptions is not going to be as apples to apples in terms of like the EV vehicles adoptions compared to the chargings. But it's definitely still something that you want to have in your portfolio to diversify, as this is going to be a necessity going forward. As in the next 5-10 years, I think ChargePoint is going to be like the Shells, the Exxon Mobil, those type of gas stations, if you may, going forward. So my target for end of this year is going to be $45. Basically, go back to the like mid all-time high level that we experienced in last year of like Q3, Q4, which gives you a 77% of upside, 1.8 times your money. And that's all I have for you guys today. Thank you for spending time with me this morning or this afternoon or whatever. Please, hit the like buttons below, hit the bell notification. Feel free to comment below. Give me any advice, any tips. This is still relatively a new concept to me. I'm still relatively new to YouTube. This is a new cadence in my life that I'm doing for my family, and most important, doing it for you guys. Hopefully you guys find this helpful, and stay tuned and watch out for the next video coming up.